This week's crypto recap. FTX will start selling their crypto tokens very soon. Should you be worried? The SEC strikes again, going out after NFTs, and crypto's largest wallet, MetaMask. That's right, MetaMask gets a big update. We discuss all this right now on this week's Collective Shift weekly recap with Matt and Nick. Actionable insights and a breakdown into the market, just under 30 minutes for you. As always, we'll start with the market update with Matt, followed by the FTX news. Matt, what do the markets look like?
Thanks, Leon. Slightly greener this week, which is something I haven't said, feels like in a while. So currently, Bitcoin up about 4% for the past week, ETH up about 1%. But yeah, still trading in that sort of range where we have been for the past few months or so. So yeah, everyone's sort of watching, interest rates and what the Fed and other central banks are doing. It's sort of going to be a relatively eventful week in that area. More so than recent weeks in September so far. Notably, we've seen, stable coins as well start to tick up. And as we've always been saying, stable coin supply is often a very good indicator of, just interest and usage of cryptocurrencies. That's largely attributable to Coinbase, a big exchange, signed to offer some actual interest rates or higher rates for people who are depositing, a USD stablecoin. So, that's been an area that has started to get a bit of traction. It's been quite a notable decrease in this year and even a bit into last year. But that's the state of the market for now. It's nice to see a tiny bit of green, up slightly.
Yeah, that's right. We have been waiting for this green candles to come across. And I want to see the biggest green candle take us all the way up to 100K, but I think we'll have to wait a long time for that to actually happen. Nick, my man, let's go over to you, my friend. Let's talk about the FTX news that recently came out. Now, I think if I have it right, they have the ability to sell some of their tokens very soon. We're going to discuss very lightly if you, the listener, should be worried about these token sales. So, Nick, what's the update with FTX, mate?
Yeah, spot on. There's been a lot of concerns in the market, kind of overhanging about this idea of FTX and all the cryptocurrency that the administration has recovered, found, and they now hold about how much they were going to sell on the market. There is so much uncertainty, but we got some certainty in the last week with a court accepting and approving the ability for the FTX administrators to start selling off some of that cryptocurrency. Now it sits at about 3.4 billion in I think liquid crypto, and that's in about Bitcoin, Ethereum, and a whole bunch of other cryptocurrency altcoins. So what they've actually been approved for is about $100 million of sales, but this is actually excluding Bitcoin, ETH, and other stablecoins. So they can sell quite a considerable amount of altcoins at once. So essentially, FTX just want to repay some of their creditors, all the people that are owing, with fiat instead of this crypto. They're sort of citing that there might be risks in holding it in case the markets do plummet a bit further down.
Now, Nick, I wanted to ask you about this. Now, I had some funds myself on FTX, and I'm sure some of the listeners out there may have funds on FTX. What actually happens? Like, what's the material effects of FTX being able to sell these tokens on the market? And will they even do it all in one go? What do you think will actually happen to the markets, Nick?
Yeah, so this was the biggest fear, that there was going to be a sort of event where FTX would sell off all of their cryptocurrency in one hit. But what they've actually said that they, I think, are in favor of doing it gradually, not in one big hit. And so they've enlisted Galaxy Digital, which is one of the biggest investment firms and trading desks in the space, to help facilitate this. And they even said that may even hedge or stake their cryptocurrencies. So it's not necessarily selling, but they may, put their crypto to work in some cases. But the big fear here, as you sort of alluded to, was that there was going to be a lot of cryptocurrency hit the market at once. So although I think this does have some truth to it, because a lot of, I guess, cryptocurrencies that have smaller liquidity, and we've seen so far this year a lot of liquidity has come out of the market. So essentially, big bulk selling could move the markets a lot more than if it was in a really attractive market where there's a lot of liquidity and a lot of money on the sidelines, or a lot of money going into these markets. So in some cases, there may be, some selling pressure, as we've seen that there's demand's really dried up. So this really eats into, I guess, the buyers in the market. But on the other hand, some of it may be overstated in the case of Solana.
Right, I fully understand what you're saying there because when you look at it, some of these tokens have very small liquidity. Like the swimming pool is very small. So if some big whale comes in and wants to try and splash in that pool, there's no room for them at all. So the price is just going to tank. I kind of get it. Thanks, Nick. But the deal with Solana, you did say they had some Solana. I think it's probably the largest holding that FTX, or at least the creditors, do have. What's the dates look like for Solana? Is it the same as all the other tokens?
So with Solana, this is probably where a case may be overstated because although they have or hold about, I think it was about 14 to 16% of the remaining circulating supply, which is a lot just for one entity to hold, they can't necessarily sell this onto the market right away. And there are sort of lockups in when they get to sell their tokens. And so you can actually use different websites such as DeFi Llama, which you can look at their token vesting schedules, and it says that it's their tokens are going to vest all the way up to about 2028 or 2027. So it's going to be another full 5 years until all those tokens fully vest. So there's only going to be a small portion at each time that they're allowed to sell on the market.
Yeah, right on. So that might not affect the market as much, but at the same time, the tokens are heavily liquid, so it may affect it. So I guess we just have to wait and see, right? It depends how fast they want to go with it. All right, Nick, my friend, thank you very much for the update on the FTX saga. And audience members out there, don't worry, we will keep you up to date. If we do see something happening on chain, we will let you know. But for now, let's head over to our head of research, Matt. He's going to talk to us about the SEC and NFTs. Now, I know this NFT group that the SEC is now going after. They had a really popular kind of an NFT sale. They had an animated series. It's Stoner Cats. I wonder if you guys have heard about them. So, Matt, what is the SEC doing with Stoner Cats? Just like you never thought you'd hear those two words in the same sentence before, right?
No, absolutely. Yeah, the SEC came out last week and charged the creators of Stoner Cats, the project. Was basically, an animated web series. So basically like an animated TV show, if you will. And they charged them with, conducting an unregistered securities offering in the form of, selling NFTs. So they raised around 8 million, equivalent US dollars from a sale of these Stoner Cats NFTs. They sold out in about 35 minutes or so. So it's the creators of Stoner Cat sort of agreed to pay a penalty of about $1 million it was, and they will be destroying all of the Stoner Cat NFTs that the team sort of holds. And they did not admit to guilt, or they did not deny guilt, similar to what we saw. So if you would remember, this is the second sort of enforcement by the SEC of an NFT project in consecutive weeks. Impact theory, we spoke about last week, and that was sort of a similar scenario there with the project not admitting to guilt or to be not guilty. Same as last week as well. Interestingly, two of the SEC commissioners, so there's 5 of them that make these decisions. 2 of them dissented. In other words, they sort of disagreed, and they sort of published their reasons why. So we saw that 2 weeks in a row, but the majority rules with the 3 commissioners sort of deciding to charge these projects here. So, that was sort of notable that there is sort of a bit of debate going on within the SEC itself about, whether these things are securities, whether they're not, because, the 2 dissenting commissioners here sort of saying that these NFTs aren't all that different to, well, they use a specific example of a Star Wars collectibles and how people maybe bought them very early on a few decades ago and then are selling them, once the show becomes popular. So, it's interesting in there. And I guess it does have broader impacts for just NFT enthusiasts, collectors out there as well.
Yeah, Matt, I kind of get that analogy. What's the difference between these NFTs and a Star Wars collectible, right? People buy them because, one, they like it and they want to keep it for a very long time as a collector's item in their display case. I want to do that with an NFT. Why is that any different, right? But my follow-up question there today is, like, I have some other NFTs myself. Do you think it's actually, we understand a collective shift that NFTs are higher on the risk curve, but do you think it's actually safer to be in NFTs at the moment?
I think I would sort of just encourage, anyone who's holding NFTs to just question why you are buying it. And I think similar to what I said last week, really, it's I view it more as like an enthusiast sort of area, almost like a hobbyist area where you're not really motivated by financial gain. More so, you're motivated by other areas in your life, which would, you'd either get joy out of holding a certain NFT, or you'd build contacts by holding a certain NFT and joining a community. I think those are really the reasons why I think holding NFTs can be a powerful concept. And that's really the remaining use case, or one of the few remaining use cases that is really continuing to hold its own, I think. And it's becoming a lot clearer that, yeah, anything to buy an NFT for financial gain is, at the end of the day, not really proving to be like all that sustainable. And the projects that are really sort of encouraging people to buy because the price might go up are really the ones that are starting to be targeted with the SEC, particularly in this sort of charge against Sony Cats, reference different like times in the history of the project where, they might have used social media to, either like encourage people to like, buy the NFTs because they will be expecting, a higher price in the future, like things like that. So that's really the state of play, at least at the moment, until hopefully some clearer regulations, particularly in the US, down the line.
Yeah, I think I kind of understand that as well. These Star Wars NFT, these Star Wars collectibles, they don't say buy us and sell us for a bigger price later on down the road, right?
Yeah.
It's the
Yeah.
NFTs that are doing that. So that is a big difference. You're correct there, mate. Thanks a lot for that NFT update, mate. The SEC just going after all the NFTs. Next week, we might be covering another NFT rip that's going down. So we'll keep you updated, guys. But let's head over to Nick as well, our resident crypto researcher. Let's talk about institutional clients. Now, Nick, I know institutional clients will be coming into the crypto space, even if they're not already here, right? So some banks out there want to work with these institutional clients because they keep asking them to. There's been some recent news in the European Union, I think, to do with Deutsche Bank. Can you tell us what's happening with Deutsche Bank at the moment?
Yeah, this is one that maybe skips some headlines, but it's another example of big banks really getting involved in cryptocurrency. So Deutsche Bank is one of the Germany's largest bank. I think they hold above $1 trillion in assets and customer funds. And they announced that was going to start to offering cryptocurrency and tokenized assets and sort of custody services for its institutional clients. And it's partnered with another Swiss crypto company on this offering. But the high level here is really it's just more banks getting involved in crypto custody. And they're not so afraid now to start to hold these crypto assets for their customers.
Yeah, Nick, these institutional clients, when they come in, right, and they all have a whole bunch of money in there, just superficially, high level, what usually happens to the price when these big institutions start coming in? These banks start helping them to come in, right? What if they all want to hold their Bitcoin? What does that do?
This is a big reason why a lot of people are, I guess, excited why quote unquote the institutions are coming for crypto in a way, is because this does make it much easier for these big players to get involved in the space. No one wants to hold seed phrases themselves or trust even some crypto native companies to start to hold, because there's risk and trust assumptions in that alone. So we saw another one that was a big one, which was BNY Mellon, which is the oldest American bank, also made these moves last year to start to hold crypto for their institutional clients. So the big takeaway here is that it's just easier for them to hold, which then allows them to navigate the space more safely. And for many people, they would rather trust their local established bank that has been around for a while rather than any crypto native platforms such as a Binance or Coinbase.
Yeah, definitely. I can totally see that actually happening. It's just for market participants like yourself, me, Matt, in here. We like to self-custody. We like to keep our own ledger, our own seed phrases. But when it comes to some other people around the world, they may need to use a bank because they may not be in that situation to actually keep it themselves. So I can totally see that actually working out for them. I guess different market participants, right? You never know. Everyone has different needs. So, Nick, thank you very much for keeping us up to date on that. I want to move over to Matt over there. Matt, we have some information coming out from PayPal again. Now, PayPal, we actually talked about them not long ago, maybe even 2 or 3 weeks ago. What are they doing now in Web3, and what do they want to do with us here? I'm so curious about PayPal now.
Yeah, another sort of very encouraging sign. So PayPal here expanding its crypto offering that it's sort of been pushing into, in the past, 12 to 24 months. So this time they've introduced basically an off ramp. So an off ramp is just how do you get out of crypto back into US dollars? An on ramp would be the opposite, getting from fiat currency like Australian dollars, US dollars into crypto. So PayPal, yeah, launched a new off ramp service last week for certain US users, depending on what state they are in. So they're starting with that. And then, yeah, those users will be able to convert their cryptocurrencies or certain ones into USD directly from the wallets that are held within their PayPal accounts. So, yeah, very, very exciting, encouraging to see these, giants of the fintech space. We've talked a lot about Visa, MasterCard, and obviously PayPal just continuing to release, more comprehensive, I suppose, crypto offerings to, importantly, not just us crypto natives, but actually, yeah, more importantly, non-crypto natives and people who don't really know much about the space. And as Nick sort of pointed out there, people who, may not want to use a crypto native, exchange and many other businesses, but rather they would trust something they're familiar with. So yeah, it was another sort of week and another case of an expanded product from one of these incumbents in the fintech space.
Yeah, these payment providers like PayPal and all of these other ones, they really, really love coming into the Web3 space and at least making a lot of waves because they are bigger players. And when they make an announcement, everyone pays attention. And I guess that's what we're doing now, right?
Mm.
Thanks for that, Nick. Sorry, Matt. Mate, let's go over to Nick. I know, Nick, I want to get to you because I'm very concerned about Binance at the moment, and I don't want to be spreading fear, uncertainty, and doubt out there. But something new has happened with Binance. I think the exodus just continues. What's happening with Binance? Let's do our Binance checkup.
Yeah, I think we might have to have feels like a regular segment coming on the show
Yeah.
now with our Binance checkup. But the latest news coming out of Binance is that Binance US, which is uh, Binance is a parent company, and it's got a sort of this spin-off Binance US that offers less cryptocurrencies, but is sort of compliant in the US. Their CEO has and president exited the company amid a lot of this uncertainty. And they also had, I think, 1/3 of the Binance US was laid off. And they also had, I think, a few key legal and risk officers, executives leave, which is another example of the trend that we've seen with Binance parent company, which has seen a lot of layoffs and exodus with key members on like the leadership team and in high profile positions.
Yeah, it's quite something, isn't it, to see a big behemoth like this, just people leaving the company back and forth. Every week we've been covering this. This is actually starting to be a little bit concerning for myself here. I don't hold any funds, and over at Collective Shift, we always say, not your keys, not your coins. And what that means is get your stuff off the exchange. It's very simple. So, Nick, I think next week we should carve out a time and do another Binance checkup and see what else new is happening with Binance. I think we should do that. Yeah.
Yeah,
Um,
no doubt. I'm sure we'll have something to talk about.
yeah, that's right, definitely. Now, Matt, I want to talk to you about MetaMask. MetaMask is one of the biggest, probably is the biggest wallet used by everyone in crypto and DeFi. If you want to do anything on Ethereum, you'll probably use MetaMask before. They have come out with a new kind of update, and they're called Snaps. I'm not too familiar with Snaps. What can you do with it? Can you tell us a little bit about it?
Yeah, it's been a long time coming for MetaMask. So Snaps is, think of it. I think the best analogy I can think of is think of it like the web browsers, how they have extensions. Like Google Chrome, you might have an extension of an app that you like, whether it's to do with your shopping online or password management or a number of other extensions. It just extends the functionality of the thing that you're using. So in this case, MetaMask Snaps extend the functionality and what you can do with MetaMask. Why is that such a good thing? Well, we've talked a lot about user experience being pretty terrible in crypto compared to, I guess, using financial services. MetaMask is using these snaps to allow, I suppose, other developers to create extensions where your wallet can essentially plug into, other use cases. MetaMask, the actual core team, has done an initial release of 34 what they are calling snaps, where they're essentially add-on features. So this is very encouraging to see. I remember MetaMask announcing this, I think back in 2018. And they, I think, they tabled it or put it on the shelf, I think in 2020. And then I think they announced it again last year that they are going to pick it back up and work on it. So it's important for a lot of reasons. I think for just, regular people who are, holding Bitcoin and or crypto and sort of using different apps. I think it's the main takeaway here is that the user experience and I guess using wallets and interacting with the whole crypto ecosystem, this is another latest piece of evidence that it is getting easier, but keeping in mind of how much further we have to go. But it's all pointing in the right direction.
Yeah, I do definitely agree that it is getting easier with these snaps with MetaMask and even Solana and Phantom, the base kind of well-known wallet in Solana called Phantom is actually getting a lot easier to use as well. So, the whole space takes time, but it does get there. Now, I want to ask you guys from the team. I use Phantom from Solana. I also do use MetaMask myself. But Nick and Matt, I want to get your opinion. What wallets do you guys actually use? Matt, what wallet do you like to use for your EVM chains?
Yeah, I've sort of played around with a few over the years. I just kind of keep coming back to MetaMask. Like, as much as I try doing other ones, there are ones that I find that are actually better in terms of in terms of speed and things like that. But I think I've sort of am doing the same as probably what many thousands of people out there are doing, is sort of just going back to the old familiar MetaMask. But that I do acknowledge that there's probably a lot of ones pushing pushing the boundaries in terms of account abstraction and just making things easier for users.
And Nick, mate, what wallet do you like to use?
I've been pretty notable. Matt knows this about me, that I've always been vocal about how much I despise MetaMask's experience.
Yeah,
They've kind of been sitting on their laurels a bit, being the market leader and haven't been forced to innovate on that side.
That's right.
But so I've tried to use a Coinbase wallet a bit more because it's got a cleaner use. And I always say for anybody who is interested in really using this stuff for themselves, perhaps Coinbase wallet is more easier to onboard people into rather than MetaMask, which you actually have to add your own networks in some cases if it's not supported. So it just makes it a very difficult sometimes. So I use MetaMask, but also Coinbase wallet when I can.
Yeah, right on, man. I have been experimenting with Coinbase Wallet myself, and yes, it is better than MetaMask. But just like Matt, I always keep going back to MetaMask. I don't know why. They have this hold over me.
And just to emphasize there as well, we're just talking about the apps that we're using day to day. We're not talking about cold storage wallet. It's kind of equivalent to having a deposit box at the bank versus your everyday wallet, which probably won't exist in about 10 years or so. Your leather wallet, I like to think of those as the warm wallets or hot wallets, which is like MetaMask, Coinbase, Phantom, things like that. But you would never have like what you would have in your bank, in your wallet. Think of it like that. So Ledger, Trezor, still great for cold storage wallets.
Yeah, that's right. And if you get confused by anything we say here, make sure you check out the collective shift resources. We always actually have resources based on this stuff. We have explainers on between cold wallets and hot wallets. Check it out if you want. So, my friends, let's all move on. Let's talk about some notable altcoin updates this week. What has happened? I think Polygon, maybe Sui. Matt, do you have anything you want to share with any altcoins today?
Yeah, I think Polygon is really top 10 project out there, top 15 maybe by market cap, and they're going through a big overhaul at the moment, revamping and creating what they're calling Polygon 2.0. Sort of an update there just quickly is they've sort of begun the voting process. So the community of sort of token holders and whatnot are sort of chipping in and discussing different, I guess, parameters and what should go into Polygon 2.0 initially, what could maybe get pushed down the line, etc., etc. So for anyone interested in that, that's sort of going on this week. I know Nick's got the next one here.
Yeah, this was probably the other one that I noted this week. That was Sui, which is a new blockchain that was created in a spin-off from Facebook's failed blockchain. They launched this Web 2 login option to use dApps, which is very notable. And as we talked about, MetaMask trying to make it easier to onboard, they're essentially saying that you can access these crypto native applications, but still use your Web 2 logins for those who find that a better user experience rather than creating your 12-word seed phrase and having to write it down and store it somewhere and adding it to your many other list of crypto wallets out there. So sort of a small thing for Sui, but I'm really excited to see if more applications or blockchains start to create these in-between options for those who perhaps don't want to store their own seed phrases.
Right on, man. And for all the listeners out there as well, we do have more altcoin updates. You just got to check out the newsletter, and I'll let you know how you can get to that newsletter later on at the end of the show. But we'll move on to our last segment in the show here, where we talk about anything that we appreciated in the market, anything that was actually over or underappreciated in the market. Matt, I think you have something that you appreciated in the market. Was it over or under?
I think underappreciated ultimately. So yeah, I had a bit to pick from this week. It was quite a busier week than definitely in August and early September. But the one I landed on here was just too hard to ignore was Visa. So we talked about them and Solana collaborating last week, but in the days sort of after our podcast, Visa came out and published a deep dive into Solana, sort of highlighting the different aspects of Solana that they really thought were, accommodating towards what they're trying to do with in terms of lowering the fees of being able to send money across the world. And yeah, it was just really nice to see, I suppose, just from an average person's perspective, anyone can log on and check Visa's website and now see why, an explanation of why they chose to do that. So they just highlighted the Solana blockchain, what it can do differently from really popular blockchains like Ethereum and well, even Bitcoin. And they sort of then just broke that down in a really sort of, well, as easy a way that they could, given the sort of technical sort of components of these decisions. But more signs of, I suppose, people gain some momentum behind Solana. But we will sort of emphasize again, just the pilot for now, but good signs.
Yeah, and Solana's been very volatile in the news, right? We were just talking previously about FTX selling a lot of their Solana, and now Visa's coming out saying, we love Solana and we want to go on there. So it's very volatile. That's why in crypto people age so much. Am I right, guys? Yeah. Thanks, Matt. We'll keep you guys updated on Solana. We do have our own crypto rating on Solana if you want to check it out on the platform. But Nick, let's go to you. What do you appreciate? What have you appreciated in the market this week?
So I've appreciated the level of crypto conferences that are going on at the moment. We saw Token 2049 happen in Singapore, and then we saw Permissionless happen in the US, which was, I think, a major theme was this US permissionless conference, and then we had this sort of the Asian focus in Singapore. And this is probably sums up the current state of crypto. And apparently, from what I've seen, both were pretty well attended, but Token 2049 was really well attended, and it looked. So I'll probably put in my favorite talk from the conference for those who are interested. That one was from Nick Carter, who gave a talk on stablecoins, which is the one area I just continue to look at a lot because it's a really leading indicator of, I think, adoption and usage of this stuff in the real world. So really fortunate to see a lot of these that are freely available. So those who maybe want to have an extra few time to spare, suggest them checking out some of these YouTube videos.
Right on, man. And some of those conference videos, some of them have really great alpha in there, and you can spot a new upcoming token or a new upcoming company, and they could be the new best thing out there. So that's the best place to kind of see it.
Yeah. A special shout out to a post that I saw on Twitter from Christine Kim, who is from the Galaxy Digital team. She said that there's about 21 Ethereum-related conferences and hackathons happening in the next 4 months, which is another on this theme of conferences and community engagement, which, for the bear market and a really tough time in the market, I think seeing that level of enthusiasm by a community is a really good signal, I think.
Yeah, it's a very great signal. It just means that people are still building, they're still doing GitHub commits, and they're still working to make the whole ecosystem a lot better. Nick, I'm sure if you find some alpha in the conferences, you will let the Collective Shift team know, as well as the audiences out there, right?
Keep your eyes peeled.
Yeah, that's right. Thanks a lot, Nick. Let's go to me now. What did I see? Something very small in the news cycle this week was Sony Network Communications, which is actually just a subsidiary of Sony. I'm sure you've heard of Sony. They do TVs, fridges, etc. They announced on Monday that it is developing a new blockchain platform. It's really a joint venture between a crypto tech firm called Startail Labs. Now, they are responsible for the Astar blockchain. I wonder if you heard of them. So this new joint venture is going to be in Singapore. It's going to be called Sony Network Communications Lab. So anyway, the whole takeaway is that, just like Matt said, some of these giant institutional players like PayPal and Visa and Sony, they are still here. They're still skirting around the sidelines, seeing where the best place to get into the space is. So that's my big takeaway, right? These guys are still here. They're putting feelers all around the space. So don't forget about crypto for now. So I think we'll end it there, my friends. That's a wrap for this week. If you're looking for more insights, make sure you check out the revamped Weekly Shift newsletter. Provides free, I say it again, free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. And we will see you next week.